Mike, Dave, let's hit it.
Okay. Good morning.
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 Come on up here, David.
Wait. I want to say something about Jim's story back there. Many of you know my background or don't know my background, but it doesn't matter. I used to be a realtor, and I used to do the same thing, open houses on Wednesdays. I have a wife, a lovely wife who would do the same thing. She'd prepare all this food. She'd get there early and get everything going, turn all the lights on, light the candles and everything. And people would show up, and realtors, especially the female realtor, said, "I wish I had a wife like that."
Hey, all right, now that we're all warmed up. Hey, no hecklers in the...
Hey.
All right, two or three things that are of importance for you to know. First of all, Fannie Mae just announced, this is a quickie, but it will affect your borrowers who are buying investment properties. It used to be that if they didn't have documented prior landlord or property management history, vis-a-vis their tax return, Schedule E, vis-a-vis,
College
thank you.
word.
Yes, that they could not use the proposed rental income from that first investment property they acquired.
But you're going to tell us something changed.
But good news, yes, they can now. It doesn't matter. They don't have to have a prior property management or landlord background in order to be able to use 75% of the proposed rental income to help qualify. So that's a bit of good news. We get a lot of tightening. So now we get some good news finally that they're loosening up a little bit in certain areas.
Let's hope that continues and we can start welcoming more buyers into the pool. Right?
Absolutely.
Speaking of not loosening the rules, though, what has FHA just done?
FHA.
Look at that.
That's in stereo.
FHA.
They're trying to stay solvent.
Yes.
They're trying to replenish their reserves for all of the claims that have been besieged upon them by the foreclosure crisis.
They have a mandate to maintain a certain percentage of liquidity based on the amount of loans outstanding.
Right.
And they're bumping along that number right now. So what do you think they're going to do?
Effective April 18th on all case numbers.
Let's go back first. This happened. This might sound like a repeat story if you've been with us since October, because FHA did the same thing in October. They raised the mortgage insurance, and it changed the average payment on about a $150,000 house about $50. They raised one form of mortgage insurance, they lowered the other, but the net effect was an increase to the borrowers. October. Fast forward to April 18th.
This is deja vu all over again. They're not raising the upfront finance. That's going to stay at 1%, right, David?
Right.
But on the annual mortgage insurance for FHA, that's the component that's part of the monthly payment. They're raising that by 25 basis points. So instead of a 0.90, it's going to be a 1.15 factor, which on your average $150,000 loan will mean an increase in the monthly payment to your borrowers of about $32 per month. Not a lot, but still, over time it adds up. And if you have borrowers that are right on the bubble, debt ratio, rubbing their head against the ceiling on can't go any farther, this could, affect them. So get with your loan officer if you've got any pre-approvals that you don't think you'll have under contract by April 18th. And if you know that they're just really stretched to get in on those based on their debt-to-income ratios, revisit that with your loan officer to make sure that you're aware of how that's going to impact their qualifying. It may mean you need to bump the price down a few $1,000s. It's about 7 per thousand, so 32 divided by 7 is about 6,000 and some change, lower purchase price. Okay?
All right.
So heads up on that starting April 18th.
That's all I got.
That's all I got. Rates are doing a little better. Stock market's down about 50 points this morning. Bond market's up a little bit. All in all, we're getting a little bit of that back that we lost for about 2 weeks, a couple of weeks ago. So, a little up, a little down, but right now, things are a little down. So that's good news.
All right.
Take care. Have a great week.
Okay, don't let that little, not cheat sheet, but that little comment that Mike made be lost. That's the number I always use. It's about $7 per thousand. So, right, if they need to come down 5,000 or go up 5,000, right? Maybe it's go up because Jerry, your seller's saying, hey, I'm not going to take anything less than 125. Barry's client doesn't want to pay it, but I said, hey, come on. What, another $4,000 or $5,000? We're talking 20, $8, $30 a month. That's nothing. Nothing. That's less than $1 a day. You know, you just start to break it down, right? It's, you know, a third of a Starbucks a day, and you just start to, you know, 99 combo meals. You just break it down, period, right? So use that number. It's pretty accurate, but then get them in to see a loan officer to get them qualified for the right price.
You know what, Patrick? You're taller than Mike and me because we're giving you a haircut in this
Yeah,
video.
that's good.
Watch for it later.
Okay, got it. Gonna be a bald.